2-3 years, we see themes which get created. And I'm just expanding this question for the benefit of our viewers so that they can relate. For example, if you bought into defense stocks 3 years ago, you made money. But if you bought into defense stocks 5 years ago, 6 years ago, you did not make money, even though we had a BJP government. So within every 5-year tenure, I've seen the new themes which get created. So one works with an assumption, which is the obvious assumption that there is policy continuity and the reform process will continue. Are you betting on something new which could get created?
Clearly, as you correctly mentioned, what are the areas where things have to improve? Clearly, we believe that rural is an area where things have to improve. I mean, clearly, if you ask me, despite the fact that we have been positive on power as a theme, see, energy as a theme is something which has to improve over the course of the next decade because India's requirement of energy has to keep increasing because the per capita utilization of energy is very low in India. And if the country has to prosper, that per capita energy consumption has to go up. So clearly, if you look at it in some way, rural energy, these are all themes which have no choice but to keep going up over the course of the next decade. That defense was certainly helped by the wars that happened in Gaza and Ukraine, and one hopes that they actually die down after the US election and get replaced by themes like rural and areas like energy, because that's what we are hoping for. Because defense becoming the biggest theme means endless expenditure on something which doesn't produce anything for the poor of any country.
So Naren, we started the discussion and we have in a sense concluded that this is not a market where you want to take big bets. This is a market where you should stick to asset allocation. So let's wrap it up with one question on asset allocation. Macros are good. India will get included in the global bond fund. I'm assuming that globally also interest rates will peak out sooner than later. If that is the construct, then are we in for 1 or 2 good years of pure debt returns, whereas a debt scheme could give you anywhere between, let's say, 8 to about 10 or 11% return?
So the coupon itself on GSEC is much lower, and as a country whose macro gets managed so brilliantly as it has happened, interest rates keep coming down. So that's why, for you to get that kind of return in debt becomes much tougher. That is the reason we moved to recommending hybrid so that a combination of equity and hybrid can deliver something better. uh, and we make use of volatility also as a factor to try to make returns. But giving double-digit returns when macro is being managed so well looks very, very doubtful to us. Because what's where we are, inflation is coming down. You saw the quantum of the RBI dividend, saw the way fiscal deficit is slowly being brought down. The tax collections of Government of India has been zooming. So, the way technology has been used to ensure that most people have to pay tax, whatever happens. So that's why I'm not a big believer that interest rates are going to zoom from. So that's why if you want to, from an investor angle, the hope to get moderate returns always comes from a mix of equity and debt and gold and silver rather than just investing in debt at this point.
If you like this video, then like, share and subscribe to ET Now.